Well, hello everyone, and welcome into today's NinjaTrader Partner Introduction event. Before I begin today, I would like to do a quick test of picture and sound, so please type an A and V for visuals if you can both hear my voice nice, loud, and clear, and see the Currentsys projection on your screen. All right, wonderful. Thank you all for letting me know. Looks like I'm coming through loud and clear today. And once again, thank you everyone for joining us here for today's NinjaTrader Partner Introduction event. As you can see, we do have John Parenti in the room of Currentsys. He's got a great presentation in store for you today. And my name is Ray Stein. I work here at NinjaTrader in our business development team. So again, a pleasure to have you all in the room today on this Saturday morning, afternoon, or maybe evening, depending on where you're joining us from. Well, NinjaTrader is pleased to sponsor these weekly partner events as a value-added service for all of our clients. These events are designed to provide you increased exposure to the various trading styles and methods taught by our partners. So we do hope you find value in these events and that you'll attend them on a regular basis. They are all free to attend, and you can see our full schedule of free NinjaTrader Partner Introduction events at the following link that will be updated here this weekend for next week's events as well. Another item I'd like to mention for those of you who are interested, NinjaTrader has also added more free online training events both throughout the week and the weekend, including an Introduction to NinjaTrader webinar immediately following today's partner event. If you'd like to see our full schedule of free training events for NinjaTrader, please take a look at the following link. Now next, I would like to ask everyone in the room a very quick question. You're going to see a poll screen appear, and if you could, please click on the 1, 2, or 3, whichever applies to you on that question. I'd just like to see what type of NinjaTrader users we have in the room today, so all you need to do is click on that 1, 2, or 3. While everyone's filling out that poll question, I'd also like to mention that if you want to comment about today's presentation or to learn more about the NinjaTrader software or how you can use Currentsys with NinjaTrader, please feel free to send us an email to sales@ninjatrader.com. We'd love to hear any questions or comments that you have about the presentation, the presenter, or anything relating to NinjaTrader. Well, thank you everyone for filling out the poll screen there. It looks like we currently have the most free license users in the room today. So wonderful to see so many of you have made it over to the website to download the software absolutely free. Next, we have a lot of live license users in the room. So great to see so many of you trading live to any of our over 100 supported brokers around the world for stocks, futures, and Forex trading. And then we do have a good handful of you not yet using NinjaTrader, so a very special welcome to you, especially if this is your first time seeing a live NinjaTrader Partner Introduction event. We know you'll enjoy the event today, and I do invite you to download NinjaTrader absolutely free from the following link, where you can try all the features of the software for free, including the advanced analytics and even full system development of your indicators and strategies. Now, once you've tried all the features in your free simulation account, you're ready to place a live trade. That's the only time we ask that you either purchase or lease a live NinjaTrader license key. And the best value is owning NinjaTrader for life. At the following link, you can find our lifetime purchase options, which include all feature enhancements and upgrades to the software for life, as well as our great lifetime support. If you're not yet ready to own NinjaTrader for life, please take a look at our several leasing options. We do have several flexible leasing options available to you, so you can try live trading with NinjaTrader on a shorter term basis. NinjaTrader also is not a data provider or a broker, therefore you do need to get connected to one of our supported data providers or brokers for data. The preferred data provider for NinjaTrader 7 is Kinetic, which provides free end-of-day data for stocks, futures, Forex, ETFs, and indices. And you can actually connect to that free end-of-day connection anytime by going to the File Connect menu in NinjaTrader 7. Intraday tick and minute data as well as live data packages start as low as $50 a month, and you can also qualify to have your CME exchange fees waived, saving you up to $304 per month. So please visit Kinetic.com today for more information. Well, once again, we are very excited for this unique event today. We have John Parenti in the room of Currentsys, and John's topic today is going to be Discover a Complete Trading System for Equity, option futures and Forex markets. So please join John for an in-depth webinar on the tools and techniques needed to become a professional polished trader. Thank you all again for your attendance today, and without further ado, it is my pleasure to welcome into the NinjaTrader webinar room Mr. John Correnti of Currensis.
Hi, good morning, everyone, and thank you all for taking the time on a Saturday morning. Some of us early, some of us maybe late in the day, depending on where around the world you are, and certainly appreciate you coming in. I want to say a special thanks to NinjaTrader. NinjaTrader actually is one of our premier providers of charting software, as well as Kinetic for their data feeds. I use both every day in trading, so like them a lot. Guys saying adjust the volume a little bit, I'm too loud. How's that any better? I'm a loudspeaker when I get all fired up. Okay, good, thanks. Anyway, thanks to NinjaTrader for sponsoring the event this morning. Appreciate it, and allowing us to be one of their technical providers and writing to their particular software, etc. So today, unfortunately, the markets are closed, so we're going to see signals and things that obviously happened yesterday. I'm not one that's going to go back in time and pick the best of the best or show you something that worked 5 years ago and call it that our system works every day. I'm not going to do that. I don't believe that that's fair. What I am going to show you is charts from yesterday, and obviously you see a bunch, but I'll expand them as we go through to show you the various indicators that consist of our system. And really yesterday or the day before is worth of signals, so you get an understanding of how truly good we believe our system is. I do have to say that I am registered with FINRA and the NFA. Anything that I'm saying today, past performance is not indicative of future results. All systems do fail at some time, and when I mean fail, not every signal is going to be a winner. Martin says they can't hear me now. Maybe turn up your speakers or something there. I think everybody else can hear me, but not all systems, are going to have winners every day, or every signal is going to be a winner. But what we teach people is not only how to utilize the system, but writing trading plans, money management, etc. I want to say that a lot of people are looking for a holy grail and jump around from system to system to try to find something that's going to work for them, all the time. And I truly believe that there is a holy grail, and I believe that the holy grail consists of a system that has been time tested, meaning that it's been around for a while, that it's not specific to one particular market, meaning that you can use it in equities, options, futures, and Forex. I believe the next part of a Holy Grail system is a trading plan, meaning that you've tested that system forwards and backwards, and that you've put all your money management aspects into the trading plan, and have confidence that that system and plan is going to be robust enough to take you into the future. And then number 3, and I believe it's probably the most important one, is that your psychology is in tune with the first 2 pieces. And what I really mean by that is that you have to have confidence in yourself that you're going to be able to follow a plan and follow a system rules, so you can hopefully get the riches and rewards that you're going to try to achieve by making trading part of your life. So that to me is a holy grail. I don't believe it's just a system, a plan, or whatever, but if you have all 3 of those firing at a particular time, then you're feeling the market. Some people call that trading in a zone or whatever, and that's fine if you lose that definition. But to me, that's a holy grail. Having 2 of the 3 of those, you're going to have still obviously some success. Having 1 or none, obviously you're going to be floundering and not knowing which direction you need to go. Hence, people often jump around, to different trading platforms or trading methodologies, etc., and can't really find a home. So, we certainly help with that in our mentoring processes when we're talking about our system and other people's systems. People come to us after they've, jumped around. We're not here to judge whether or not you use our system or not. We think it's pretty special, but at the end of the day, people come to us because, maybe it's a last resort, or, they've heard about us on Forex Peace Armies or whatever, that we do the things that we say we're going to do. So I'm going to start out by saying that the system was developed back in 2005. So we've been around for 7.5 years. We've really seen, many of the markets that, from very good markets to choppy markets to, explosive markets, etc. A guy by the name of Phil McGrew, good friend of mine, started the company Currencies. First of all, he worked as in the Navy on nuclear subs. He's a nuclear engineer. After leaving the Navy, he worked for a power plant in a nuclear reactor. And then he found his passion for trading, so he actually traded electricity and was on the and traded on the floor. So that's where he really got his footing and passion for trading. Once he left the power company, he said, listen, I can make money on my own, so why am I making all this for the electrical company? So he wanted a market that was 24 hours a day, sort of gravitated to Forex, and took 6 months to develop the system that we have today. The first systems were sold back in 2005, so again, we've been around for a while. I'm here to tell you, and I think that you get the gist of what I was saying originally, is that trading is risky. You need a quality system to increase the probability of success. Also, obviously, I said about a plan and psychology. Really a program that addresses the different market types. Most systems, from MT4 stuff to anything out there, has really been developed around one particular market type, whether that's trending, choppy, reversal, or breakout markets. And when you're in one of those particular market types, the system does very well. But when you get out of that market type, the systems don't seem to perform very well and or give back all the money that you got when you were originally in that other market type. Our system, however, addresses all of the different market types. So trending, choppy, reversal, and breakout markets. Again, most systems out there are developed around whether one particular, either equities, options, futures, or Forex. So a lot of times they're right-fitted or optimized to a particular market. Our system and most anybody that is a professional trader out there or a professional code writer knows that optimizing is not the proper way to build a system and to make it perform over a long period of time. And that's why we believe that our system is a very good system, because we have not optimized most of our signals here. We have developed a program that we believe works in all of these particular market types, and I'll go through the different signals here very shortly of what our program has to offer. So anyway, Currencies consists of 3 systems that work as one. When we're in a particular market type, the other systems become quiet, and why that's important is that's false signals. Helps reduce the potential of, again, false signals. I'm going to show you recent and real-time signals. Obviously, the market's closed, so we'll go through those now. I first want to talk about our breakout system. And our breakout system is one of the 3 systems based on the Bollinger brand breakouts. Benoit asked me if I'm in multi-trader mode now. Yeah, I believe so. And basically the breakout systems consists of about 15 to 20% of our signals. And I'm going to go through, I'm going to pull up this is the euro-dollar chart. A lot of people like trading the euro-dollar. And I'm also going to pull up the pound-dollar. And go over a couple of signals from yesterday and also the day before. So let's start on the day before. Obviously, you see these lines here. These are breakouts. And this happened around the FOMC meeting yesterday time. Breakouts fill a nice void in our system where our dot system requires market movement. Breakouts really need a quiet period. Our dot system, which I'll go into, is based on MACD and really needs volatility or oscillation of MACD. When MACD approaches zero line or flat, the market signals are filtered out. You can see examples of these on our YouTube videos where I say, "Mom, look, Mom, no dots." There's 2 or 3 of those videos out there where we're in market consolidation or very thinly traded markets, and there's no signals. Breakouts need consolidations to set up for an ensuing price action. Our dot system and the breakout system complement each other very well. Breakouts need at least 14 days to calculate ATR. ATR is average true range. So we tell everybody to at least have 15 days of data on their computer or charts. Breakouts need a squeeze period. Typically, the Asian markets where price is very tight for a minimum of 8 candles, which on a 15-minute chart, that's 2 hours to start a trigger. Breakouts come about from John Bollinger's book, Bollinger Bands. Breakouts are good in Forex because there are usually periods of low volume with low volatility, which are prerequisites for breakouts. Now, you're saying, what's so special about breakouts? Well, most trading systems have a breakout system. And to that end, not all of them are very successful. There is a balance when trading these entries. If entries are too tight, false breakouts. If they're too loose, you give up too much. Price is neither cyclical nor forecastable. Volatility, however, is. Low volatility, squeeze market, begets high volatility. High volatility begets low volatility. Again, going back into a squeeze. And we'll show some good examples of that from yesterday. During our trigger period, the system is recording the highest high and the lowest low. Once these are done, the system adds a fraction of the ATR and gives us our entry prices. Now, here's an example of the euro-dollar. I said this is around the FOMC period of time. We see prior to this orange dot and black dot, which I'll get into those in a little bit, but if you see the price is very tight, very thin, then all of a sudden we get some news come out about FOMC. We have a price of 123.16 of a breakout, and boom, an explosion and follow through of price. Now, our system and our rules say that if we get a long candle like this one particular here, that is a very good exit strategy. And what I mean by a long candle is one that comes out of ordinary and is longer than the preceding few candles, and really that's the market saying thank you very much, and I want to take my profit and move on. And as we see, it called out the breakout 2 candles before this large candle. The market actually went up to 124.06, which was basically a 90 pip move, okay, from our breakout number, and we would have taught you to exit the market if we're getting that kind of a price movement. And as we see, the market went down after that and did not follow through. And that was a great exit strategy. But prior to this long candle, the market pegged this particular breakout move. Similar move on the pound dollar. About the same time at 156.97, market rose to darn near 200 points on this particular move, okay? Great exit strategy. Also, we had a reversal dot, which we'll get into those in a little bit, but that was a tremendous move and a very good exit strategy both on these both breakouts. Now, something that I teach our people is that if we're getting, and these two particular pairs are correlated, meaning that they do similar things in the similar time frames. So if I'm seeing a breakout happen on both of these at the same time, that is a good indication that that's a very good signal and that I should take, extra, not precaution, but I should jump in and do the right things based on our signal rules and my trading plan. I don't need to think in scenarios like this. I often teach people about, again, looking at correlated pairs. And if I'm getting similar signals like we have here, that's a time to move on the market. Now, if we didn't have a breakout here, what would happen is after the system starts to calculate, after each candle, the system recalculates the volume and the volatility, all right? And if there's new highs or new lows or changes in ATRs, that means that price is static, okay, for 15 minutes and then it's subject to change. Breakouts require very specific criteria to trade. Price has to push through, like we see here. Price blows through these numbers. Very good example. And again, this was just the day before yesterday. And I'll show you again a similar signal yesterday, and that was non-farm payroll day. When price hits, obviously they hit here and here on the pound, they'll change to blue. These were long trades, both of these. And if it was a short trade, it would be red. Now let's look at, now again, market very quiet. We talked about how volatility, high volatility begets low volatility. Here's a great example of low volatility. A lot of market squeeze, not a lot happening. All of a sudden, boom, we get another explosion of, here again, market very tight, starting to build. Our system calculates a price, 122.14, and boom, the market goes up. Now this particular trade was an excellent one because we had an exit strategy on a gray dot. And that particular breakout was for about 50 pips on this particular breakout. And then the market continued to go up. Now this was yesterday prior to non-farm payroll. Non-farm payroll happened around 8:30. Which was somewhere around in this area, which we would have been out of this trade already, taken our 50 pips and said thank you very much. We don't suggest trading non-farm payroll before, like say half an hour before or after. If people want to engage the market around non-farm payroll, we say wait at least an hour after so the market has time to digest what's going on. And again, on the pound, yesterday we see a lot of volatility here, begets low volatility here. Waiting for an explosion of volume. We got it here about the same time that we had a little bit after our Euro breakout. But on this particular one, per our rule set, drum roll, this one did not work out very well. We would have been stopped out on this long candle down. Something that you'll know about us, that when we're doing our weekly reviews and showing our system, we record all good and bad trades. Here's an example of a breakout hitting somewhere around the top on this. Then non-farm payroll comes out, very choppy market, nice short, and then a pursuing long. But we would say that, okay, we had an opportunity. There was a probability of follow-through. This particular one didn't work out. But the last three did. Okay. Now, if we have a green, prior to our breakout signal happening, you'll see a red and or a yellow and green lines that are plotting price. Now, if we have a green line, which means that the market hasn't moved 80% of ATR, and it's very important that we understand what ATR is. ATR is average true range. It means basically the movement of that particular pair, on a daily basis or over the last 14 periods. So, if our signal has calculated that it's a plus 80% movement, then you would see a yellow lines plotted prior to our breakout. And what that means is that the probability, and that's a caution, obviously a stoplight is red, green, and yellow being caution, would caution to tell you that movement has gone 80% of ATR for the day, and be careful that there might not be enough room for follow-through. Now, if the lines were green, that means it's sub 80% or less than 80% movement for the day, and then that would be a better probable trade to take. So if it's less than 80%, there's a good statistical potential that the move would go further. Yellow, that the market has moved more than 80%, and if triggered, there's a poor statistical potential that the market would move forward. Remember when I was saying that breakouts are specific in nature and price is specific in nature? Almost 2/3 of our breakout signals never triggered. And again, specific. If I left the trigger lines on, you would see, and you can do that for, say, backtesting purposes, you would see that there would be a lot of lines on the screen that did not trigger. The breakout signal is good for 20 candles, and 20 candles on a 15-minute chart is 5 hours. Now, at the end of 5 hours, if we didn't get a dot in the opposite direction like we have here on this gray one, or a 314 EMA cross, we would have a decision to make. And the decision is either we're going to get out of the market or we're going to stay in. We sometimes get a conflict between the dots and breakouts. Now, if we were to get a dot, typically right after a breakout, we would ignore that particular exit strategy. And what I mean by right after is usually 2 to 3 candles after we have a breakout signal, we will get say a gray dot or a black one like we did over here on this particular breakout on the pound dollar, which would signify to us to get out of the market. But because breakouts in our methodology trump the dot system when triggered, that we would ignore those particular exit strategies right after a breakout. We would only employ those particular exit strategies if we were plus 40 pips into profit. Then if we got a dot in the opposite direction, we would exit the market. The exits of our breakout system, as I talked about, are 40 pips into profit. We would like to take that if we got a dot in the opposite direction. A 314 EMA cross. Time being 20 candles, or if we get stopped out. And our stops are specific to, on our breakouts, is 60 pip stop. Next thing I want to talk about is a reversal. Reversal is the orange dot, and it's a good example of this one being here. Although it wasn't a great trade right off the bat, it's an example of a reversal. Reversals. When the market is widely deemed to be chaotic in behavior, the market becomes more predictable. First, reversals must exceed a minimum number of pips. This prevents false signals. A minimum width makes sure that the market is moving before an orange dot can appear. For those of you who are familiar with the Japanese candle patterns, which occur at the bottom, hammers are congruent with oversold conditions. Hammers are usually characterized by a long wick relative to the body, basically hammering out a bottom. Now, this is a great indication of the bulls buying and refusing to let price fall. Best hammers really close near the candle high. A short would be a shooting star at the price tops and are congruent with overbought, characterized by a long upper wick relative to the body. And here's a great example of a shooting star, this particular reversal right here, trying to signify a reversal in price. Consolidation, some movement up, and being that this would be a shooting star moving down. And although the system did call it a little early, and eventually it would have worked out, in my mind we probably would have been stopped out on that particular trade as the market moved up and then a breakout, but the market did move down. Reversals are about 10% of our signals. Of the signals of the three, and are almost always against trend. And I have to admit that they're about 50% accurate. So you're probably thinking to yourself, 50% accurate, well, why even bother? Well, that's a good question. The reason is when they're right, they're really right. And when they're wrong, there's often an opportunity to exit with a very small loss or a very small profit before they would be wrong. So you have time based on our rule schedule and our rules to get out of that particular trade if it is not exploding or reversing in the opposite direction. Our exit strategy on a reversal would be a dot in the opposite direction, kind of like we had this gray one right here. It's opposite to our orange. A time-based, meaning a certain amount of candles going out into the future. If we're obviously not becoming profitable, the further and further you get away from that signal, the less and less probability you have that that's going to be a profitable trade. So we would want to exit the market. And we're very specific when we're teaching and mentoring our people about how many candles and what that means. So it's not, what we've always tried to do is to make the system very mechanical in nature. Sure, you can make it and use the system and adapt it to your personality, but for a lot of us that want a purely mechanical and want to be told what to do, when to do, etc., we have the answer for that scenario. So I was saying that our exit strategy here would have been a time-based, obviously an amount of candles. Obviously stopped out would be another one, and or a MACD cross. And in this scenario, what I'm talking about a MACD cross is histogram is green, crosses into red, and then goes back to green. That is a MACD cross, not the first cross where MACD goes below the zero line the first time. It actually is a cross above the zero line going back to positive. MACD or a dot in the opposite direction. These edges that we talk about in our particular, specifically talking about our MACD dot system, The edge is really only good for 5 to 10 candles. 5 candles on a reversal, if they don't produce, you want to get out, obviously with a small loss or break even or as close as possible to entry. So anybody have any questions along the way, certainly go ahead and write those in. And you know, as we move through here, I will certainly answer them as we go along. Now, the workhorse of our program of the 3 is our MACD dots. And our dot system is based on MACD. We really like it over other indicators because, first of all, it's not bound by any number. Typically, indicators are bound by 0 and 100, so calculate in between those particular numbers. MACD is not. It will calculate down to the smallest number and largest number. Most indicators, like I said, are bound by 0 or 100. MACD also is, we feel, the least lagging indicator. And of our 3 systems, MACD is the workhorse of the program and generates about 70 to 75% of the signals generated by our program. MACD's dots started as a way to identify crossovers, and we talked about crossovers a little bit. That's the histogram going from positive to negative back to positive. That would be a crossover. Where the fast line crosses the slow or vice versa. We found that the move was well underway when the cross happened, meaning that this particular downward movement was already in play when the cross happened, which was about here. So you're giving up a lot of particular pips here. So we wanted to anticipate the movement or the cross. So when momentum stalls is when we want signals to anticipate and enter the market. And so what I mean by a stall is the system is always looking at the histogram, and when the histogram starts to roll over, that's when our calculation starts. And we usually, after a high histogram is calculated and then starts to roll over, it must be a certain mathematical equation in which to print a dot, and we would enter the market at that particular time. If the market does not roll over with a strong enough intensity, we're not going to get a dot. And here's a good example on the euro dollar yesterday, where MACD started to rise, as you see is green, then starts to roll over here, but then start to increase again, roll over here, and then start to decline. Now after this particular histogram right here, 2 candles later, we had a dot. And then the market rolled over. Or MACD started to decline. To filter out signals, MACD must fall, like I said, a certain differential before a signal is given. This calculation prevents a signal from occurring too early based on the MACD directional change. Like I said here, we didn't get a dot because it didn't meet the requirement. We didn't get one here after these 3 histogram bars, but we did get one here starting to roll down. Good filter. In most cases, a dot will print 1 to 3 candles after the high or low of the MACD is recorded. And it did here. MACD high was recorded here at 12 o'clock, and at 12:30 we printed a dot. Here again, the high was recorded on this particular histogram, and then 1, 2 later at 7:30 the market declined. To make dots even more accurate, the system looks at a 4 times higher time frame. And so if we're looking at these 15-minute charts here, both of these two, 15-minute, the market is, or the system is always also looking at a 60-minute chart. So the color of the dots mean a lot when trading. So if we have a black dot, and we get into this very specifically in our 240-page manual and in any of our mentoring classes, etc., exactly what the dots mean. We already talked about orange being a reversal dot, but let's talk about black dots first. Well, excuse me, let's talk about gray dots first. A gray dot is an attempt to warn you about scenarios when it might not be prudent to enter the market, meaning that this particular exit or this particular entrance into the market really is an ending or a good exit strategy. And what I tell our traders are, until you become very familiar with the system, that you use gray dots as an exit strategy for one of the other particular dots. Not to say that a gray dot is a bad signal, but what it does do for you is it does show you some of the support and resistance areas and is a good exit strategy. And until you become more proficient at using our program, we say to use them as an exit strategy. A red and blue dots, which we don't see any right here right now, but we do see a couple right here. And this was the day before. This is 8/2, so this was a day or two ago. A red or blue dot agrees with the higher time frame. So that means it's with trend on the chart that you're looking at, plus it also agrees with the higher time frame or 4 times higher time frame. Plus it's overbought and oversold on both the 15-minute, in this scenario, 15-minute chart and the 60-minute chart. So really that is a very good signal that the market is oversold or overbought, and those are good signals with a lot of additional sorry, my mic went dead for a second there, but it's an example of that, you know, you are with trend, and obviously we talk about trend being your friend, that's a very good signal. High probable trend, high probable trade. Now black dots, which we have one right here, often come around at, you know, bottoms and tops of the market on that particular day. So within a choppy market or a channel. And I like to say it's you're trading within a channel. If the channel of that particular day is 50 or 60 pips, meaning that the market highs or lows of that day, that you will see black dots coming around, you know, within that particular channel. And that's good trading if you're an intraday trader or a you know, person that likes to trade the lower time frames, that you see them above and below the market. That's an indication of a choppy market and that you should trade those trades. Something about our system, you know, that is different than others is that our system does not repaint. And what repainting is, for those of you that may not know, is that all of a sudden, if you go scroll back on your chart and that particular signal all of a sudden was a good signal, maybe it didn't meet all the requirements, but at the end of the day it was a good trade, that all of a sudden that particular signal pops back up on the screen. That's a la of some MT4 old codes and things of that nature that try to make your system look better than they really are. Our system never repaints. If a signal comes about and does not meet the requirement of our entry signals or our entry rules, that signal goes away and does not repaint, even if that trade may have been a good trade somewhere down the line. So our exit strategies on our dot system is obviously a dot in the opposite direction, a time-based, meaning a certain amount of candles if that particular trade is not moving forward with some sort of profitability, a MACD cross, which we've talked about today, and or a stop out. You got to remember that within any trading system or signal, it gives you an edge. And as you move out into the future, that edge decays with time. So your edge becomes, after each candle, becomes less and less. So if that particular signal is not bearing you fruit, then you have to sit there and say to yourself, all right, how long am I going to give this thing? And what we teach is a certain amount of candles we're going to give it, and moving your stops up to break even or closing your stops to protect your account. The first and foremost thing in trading is that we must protect our accounts. We must trade with stops. We have to move our stops to break even as quickly as possible and allow trades to run, okay? So these are very important aspects that we teach people. Not all trades are going to be successful, but if we have the right risk involved and we're moving our stops up as time moves forward and we're always thinking about protecting our accounts, then we have the opportunity, even if a trade does not work out, to fight again, and we know that we're going to get our own somewhere down the line. We cannot fight a fight if we do not trade with stops. If we're not protective of our accounts, we will get blown out, and then there is no help for us. We can never fight that fight again. As I was talking about the black dots in a choppy market, that's typically when those occur. We always want to trade, from an extreme price or overbought or oversold. And the black dots really identify that on the 15-minute charts or whatever chart time you want to go from to identifying the market condition that we're in. We really don't need to think very much. When we have a black dot, we know we're in a choppy market. When we have a red or blue, it's telling us that we're in a trending market. And when we have a gray dot, we know that that's a good exit strategy. And we know when we're in a breakout market, we have a breakout line. So we don't really need to sit there and have very many other indicators on our screen cluttering up things to figure out what type of market we're in. The system tells us that. So I've gone through pretty much our three systems and how they work in conjunction with each other. I'm going to open it up right now for some particular questions. Then we'll go through a little PowerPoint presentation. Also because of the webinar and our affiliation with NinjaTrader, we offer a 14-day trial of our system. So if anybody wants to demo the program, Steve has put a link in the chat box here for a demo. So I appreciate that, Steve. And also because of our affiliation with NinjaTrader, we're offering a $200 off on our program today. And that'll go for the next 7 days to utilize or to buy our program for a $200 off. Now Rick asks, does our system work on futures and TF with range bar or Raycos? Tremendous question. Something that I've worked on a lot is that the system is flexible enough to work on range bars, Renko, Kagi, tick charts. Do not need to just be a candle chart person. The system works on futures, options, and equities, as well as Forex. Obviously, we're talking about Forex today. You do see a YM over here, and I will increase the chart size. Yesterday, a nice dot with trend, a breakout that didn't work out very well, but then a orange dot long. So this is the YM contract. This is on 100. This is on a volume chart, 100. So on various charting configurations that you want to deal with. And this happens to be YM on a 5-minute, which is my preferred for futures contracts. Here's a breakout, another breakout, nice blue dot, huge move up. And as you guys are futures traders, anybody in the room knows that that's a big money maker. And again, another blue dot high, and we would know this down here is volume in the market. I like to look at volume, basically telling me that there's a lot of buying or a lot of selling in the marketplace, which helps me from a psychological standpoint to stay in those trades when I'm seeing a lot of green. Helps me to know that there's a lot of buying in the market. This particular gray dot called this ending of this particular trend right here, move up, called that almost at the tops of that move. Very nice example. Some selling, then all of a sudden buying coming back into the market. But as we see, the volatility or the intensity of the buying right and through this section here wasn't as great, but we still see that it carried through enough for us to make some money on that particular trade. Now here's a good example of the market being in consolidation phase all the way through here, filtering out no trades. Keeps us out of the market, potentially getting hurt in a market time like that. Then we see the market pick back up with some buying, and then we get along going through here. So great example. Again, this was yesterday. This is not some chart 15 years ago or something that's trying to call out some particular trades where we had something great. And here's what day is this? This was the second, and very nice short coming through here. We see a lot of buying or selling pressure in the market. Nice short, another short here. Didn't go very well. In my mind, we would have either gotten stopped out or we would have taken off the trade taking the trade off based on our rules as far as candle rules go. And I can show another chart for this is a ES trade, and again this was yesterday. Tremendous move. This 5-minute chart again. This is from the third right here. We see the third. This is not the third 2 years ago, but this was just yesterday. Nice buy. Market moves up, huge move up. Anybody that's trading this particular contract, ES, knows that this is a big money maker, and move up. The program just paid for itself 2-3 times over just on that YM contract and this ES contract. Also a buy here, and then towards the end of the day, another buy that validated. So very nice moves. And if you would adhere to your trading plan and our methodology, you would have done very nicely on these particular trades. Rob asked me experience in automating entries with a NinjaTrader strategy. I use NinjaTrader as far as it is a live NinjaTrader, so that means that I can trade through the Ninja servers into a my broker's particular account, and the latency issue, which is always a problem in trading, is very minimal. I get very good fills, unlike some of the other platforms out there. Very minimal latency, and we get very nice, fills going through the NinjaTrader servers. I believe that's what you're asking me. A yellow dot indicates the same thing as a choppy market or a black dot, James. That would be indicative of a choppy market. And I showed a yellow dot on one of the other charts is why you brought that up. I'm going to throw up a if you have any other questions, fire away, certainly. I'm going to show a silver contract, again, for you futures guys. As soon as my screen comes up, apologize the amount of stuff that I have on the computer. Trade 240 type signals or something along those lines. The system can deal with that issue too. Rick asks, most of these charts indicate 15. Do you prefer 5-minute? Please explain. James, the further and further you go down in time frame, the more and more what's called market noise. Doesn't allow the indicators to filter out market noise as efficiently. The higher and higher you go up in chart time, the more proficient the system is to weed out that market noise. And on futures, I like it because of the consolidated feed. In Forex, it's a little bit different. But in futures or equities, even though you have market noise, you do have what's called consolidated feed or a consolidated exchange, unlike the Forex market where you're dealing with a non-regulated really market. So you have less possibility of false signals, in my opinion, on the futures markets. So if you're trading the 6E contract, say, or one of the other ones, one of the other future Forex feeds, I like those a lot. It does work in market replay mode. Rick, you can see the dots, forming as the market replay goes forward. Most of these charts are 15 minutes. Do you prefer 5-minute? Explain. All right, James, to go on that again. On Forex, I really don't like going down any further than 5 minutes. If you go sub 5 minute, a lot of market noise, again, like I talked about, and I really don't like going down there because I want better signals. We would stick, if we're in a very, very high volatile market, you can go to a 5-minute chart to try to get in prior to some of that volatility, because obviously the indicators turn over faster in that scenario, but you do have the opportunity of a little bit more false signals. So 15-minute and above, we really like the 240 chart, and it's very, very difficult to mess up trades, in my opinion, again, on 240 charts. And that, in my opinion, is one of our most accurate time frames. And we are talking about systems being accurate and profit. At the end of the day, some people like 5-minute charts or 15-minute charts or whatever, 2-minute charts, is because really they're an adrenaline junkie, okay? The object in trading, if you're going to do this professionally, is to make money. So you want to go to and play on the strengths of not only the system, but your own strengths. And that is not trading, or using the system or the time frames as a roulette wheel. It is about being profitable. So we want to go to where we can make more money. Could I go through the color of the dots again? We have black, which is indicative of a choppy market. Gray, which is really a good ending strategy, if you will, an exit strategy. We have red, which is a short, blue, which is a long, and reds and blues are indicative of being oversold and overbought and coinciding with the higher time frame. And what you see right here is a yellow dot. That is indicative of a black dot, so that would be a choppy market. And then we have orange, which we talked about before as being a Japanese candlestick, either a shooting star or a hammer, which would talk about a reversal in the market. Do you trade currencies on futures or Forex? Both, James, 6Es, etc., B, C, all of those particular markets. Again, as I told you before, we are brokers, so we're introducing brokers for a couple of our clearing firms. We can certainly help you in that respect. Also mentor you on a trade-by-trade basis, basically shadow trading you on those being, those trades being traded. Also in the Forex world, we're introducing to many of the providers that NinjaTrader is partnered with, Gain, soon to be Forex, FXCM, etc. And someone is being recorded. Yes, the recording is going to be on NinjaTrader website, as well as we have been recording it, and will be posted on our YouTube site, Currencis FX. Again, thank you very much for, I know I'm at my hour and 1 minute time frame here. You guys appreciate a lot of your questions today. Certainly if you have any particular, I was going to go through a slideshow, but we're running over a little bit. But certainly if you have any questions, feel free to email me at john@currencis.com or support@currencis.com, and we'll answer those on a oh, Ray said I can take some more time if I need it. If anybody has any other questions, then cool, fire away. On the slideshow aspect, hopefully you see this going right now. One of the advantages is the signal, at least one of our signals is always active while others are dormant. Again, trying to weed out false signals. No need to choose. The system is telling you, and you don't need a lot of stuff or other indicators clouding up your screens to tell you what type of market we're in. We know where we're going to be in a trending or range bound, a reversal, or a breakout market. I did show you about MACD dots. Obviously these are blues, so that's within a trending market. Obviously we see the market going up, so it would be indicative of a buying opportunity. Short market coming down, red dot with trend. Here is indicative, and you see these as white. Obviously a black dot would not show up on a black background, so the dots are white. So if you like a black background, you know that white dots are the same as black dots. So this is indicative of a nice choppy market where we see highs and lows, and we have a nice channel, if you will, across in order for us to take advantage of some of that intraday volatility. And what I talked about is the system being good at weeding out no dots or no signals, where the market is just not, giving us enough information where we would have potential for good, profitable trades. So the market, or our system, weeds out that periods of time and gives us no dots. And again, Rick asked, do gray dots always appear to exit a trade which was entered from a blue or red dot? Not specifically, Rick. It would also, a gray dot may come about after a black dot. And here are these white ones. Again, black background, so they come up as white. We have a gray one right here, and a gray one right here on these two tops, and a black dots or white dots on this particular screen as being exit strategies. So it's not just specific to reds or blues. Reversal dots, again, hammers or shooting stars, trying to anticipate overbought, oversold. KBT asks, do dots ever change colors once they plot? No. Again, we don't repaint. If a dot was a dot, whatever color it was, unless your data feed changes and the particular math behind that particular data feed changes, that color of that dot will not change. No. We talked about Bollinger breakouts today, reds being shorts, blues being longs. We have trade reviews. I have a couple, probably 130, 140 videos on our YouTube. We give you unlimited, support. We have a comprehensive user manual, and I try to get back to your replies to questions, pretty quickly. Normally, within a half an hour or so. If I'm extremely busy, no more than 24 hours to get back to you. We have a tremendous forum page with hundreds of traders, actively posting into the forum. So that's a nice thing. A collaboration with other traders. We have a correlation table, which is probably second to none in the industry. There's over 50-some different currency pairs, as well as gold, silver, oil, which is highly correlated, we believe, to the euro and pound pairs. We have a FX calculator. You can certainly get that off of our website. We have an ebook out there, which you also get off of our website. And our normal price of our system is $10.95. That's a one-time fee. That does include anything, future upgrades, etc. And we are offering that for a $200 off, so $8.95 for the webinar for today. And Steve put that on the chat box. There is a specific link for that. KB asks, sorry if you answered this, do the dots plot on the current candle or one or two back? Okay. All dots appear on the candle close if it met that requirement. And when I talk about one or two back, was meaning that a dot is an anticipation of a MACD histogram rollover. So that means that once the high of that histogram is plotted and MACD starts to roll over, mathematically 1 to 2 candles or 1 to 2 histogram bars after the high, and the math is in conjunction with each other, do we print a dot? Rick, yes, we do actually have a live trading room on a daily basis. That is a fee-based live chat room. We do get into specifics. We do take live trades in that room on a daily basis based on our methodology. It normally runs about 20 hours a day, so it's manned by a couple different people. KB, please repost the links for the special. Steve, can you do that, or do I have to do that? I will do it anyway. Hopefully this posts. There's the special for the promo. You're welcome. Thank you for attending. Our partner Steve's in the room there somewhere, and John at Currencis. You can certainly go to our website, and we are on there live If you click on live chat right now, you can get to us on a one-on-one basis, and we can certainly answer any specific questions and or email me at john@currentsys.com. And if there aren't any other questions, I'll leave it open for the next couple of minutes. If you have any other specific questions, I'll answer them. Again, I want to thank NinjaTrader. And I got to say, from a personal standpoint, I like NinjaTrader a lot over a lot of the other platforms that we do support. One thing in particular about NinjaTrader is if you have a problem, their support is probably second to none. Yeah, KB, send me an email on that, and I'll get into specifics about you know, the trading room and such. Trial. Yeah, here I will post a link for the demo. That's to the demo. It'll take you step by step of how to get a demo if you don't have data feeds, etc. How to get a demo data feed, real live feed, but it's a demo account, etc. So it'll go through there. Check that out. Any other specific questions about the system, me, anything? Off of correlation, and why I have all the euros down on one line here and all the pounds on one line and etc. on down the line here is because when I see like signals on like pairs or leading pairs, obviously the euro down the left-hand side of the screen here, the pound next to it, etc. When I see signals that are happening on the pound and I see them against other currency pairs, that just makes me more assured that that signal is a good signal, and I want to rock and roll with that particular you know, signal, and I want to go. Takes a lot of the apprehension out of the game, a lot of the fear out of the game, and that's what I tell our people about is trading, you know, off of correlation and off of correlated pairs to help you become more confident in your ability to understand what the markets are going to do. Anything else? All right, well, we're going to wrap it up for today, and I appreciate it. Again, if you have any other specific questions that I didn't cover today or anything that you want to know about, john@currentsys.com or support@currentsys.com. And again, I thank NinjaTrader for allowing us to, thanks, Ray, allowing us to be here today. And nice turnout for a Saturday morning where people have a lot of other better things to do. But it's nice to see that they're interested in trying to find a methodology and a mentoring process to help them to be more successful at trading the markets. Look forward to working with many of you. Some of the people in the room today were Currentsys members. Thank you for coming. Hopefully you learned something new today. Appreciate the turnout.
So